bit about the fall that we've seen in crude prices and the impact on some of the oil marketing companies like yours. If you can just start off by telling us how much the GRMs could go to in the second half of the year, because the last quarter was quite disappointing for you. Your gross margins went all the way down to $2.7 per barrel. For the second half of the year, what is the expectation?
With regard to the GRMs, of course, as you said, last quarter was not very well, but this has happened only on account of the volatility in the crude markets. So inventory loss and gain was a major factor, and over and above dollar fluctuation, that also has having an impact. So in this quarter, even that production margins and all the refineries okay, but the fluctuation in the crude prices, which may lead to the inventory gain and loss, and fluctuation in the dollar prices will have an impact. So it will be, of course, production margin of the refinery will be good, but ultimately final margin what will come depending on the inventory gain, loss, or dollar price fluctuation, that will have impact in the coming quarters.
Of course. Mr. Namdeo, good morning. Thank you very much for joining us. Typically, what kind of a length of inventory do you keep? Do you book your crude 6 months ago or 1 year ago? What is the typical, time lag for which you book your crude? And lately, are you all not booking crude for longer term, given the rapid nature of the price fall?
I think typically for the all PSU, we have two types of the crude procurement. One is a term contract, means with the supplier of the crude, we have a term contract yearly basis. So we will take the crude for the 1 year, this much quantity. And the prices of those crudes is governing by the place prices plus premium. So this is even a crude quantity is fixed, but prices will be the market driven prices, which we called as the OSP, official selling prices, where plates quotes will be taken on average month, plus individual supplier will have a premium and discount depending on his market requirement, market demand. So that is one time, and where we have to give 1 month, at least 45 days advance. This much quantity need to be taken in the month of.
No, but that is the quantity. That is the quantity. What about the price? Do you agree on the price 1 year ago?
Yeah, no, we don't agree with that, because it's a market-driven prices. Because whatever the plates quotes will be there, average 1 month quote will be there. Over and above that will be premium and discount. As I said, that will be depending on the market demand of that particular crude. So price is always dynamic. It is not a fixed price. Quantity will be the fixed.
Okay.
I
so in that case, why should there be inventory losses now, Mr. Namdeo? If the price was dynamic, surely in this quarter we should not see too much by way of inventory losses. Can we expect that?
No, I'll try to explain you. When crude start from the supplier point, from supplier location, and by the time it comes to the refinery, then it will goes to the market. It is typical cycle is about a 45 days. The refinery which is normally away from the crude source. So by the time crude will come from supplier and process, that crude prices will fluctuated, so that is one loss. The month which we process, if it is a crude price is going lower, then definitely that crude prices will have a better margin. But if crude price, we will lose the margin. But if its crude price is going, we will make up more margin. And you know that our RTP from the refineries, whatever that refinery transfer prices, this is connected with the international market movement of the product prices, and which varies every 15 days as per the international market formula.
Can you tell us what has been the marketing throughput in Q3, because it was about 7.8 million tons in Q2. What is the update now?
It will be in the plus side slightly because there was a good growth in the month of October, November. So it will be plus, but not very high. It will be about in the same range.
You did mention that you won't be able to give us an exact, view of what the gross refining margins will be going ahead. But will it be lower than than $2 per barrel? Because that's something that we did see in FY13. The GRMs had fallen to all the way to about $1.9 per barrel. Do you think that situation could arise once again?
I'm not able to tell you the exactly, but as I said, the production margin of the refinery is good, cracks is also good, but if overall effect on the dollar fluctuation and inventory gain and loss will determine the GRM of the next quarters.
Okay. I know this is not your area or not your problem, but what is the gross debt of the company and has it fallen?
Definitely, of course, it had to be our finance department had to take a call, but crude prices as is going down, so our working inventory definitely is coming down. So that will have a positive impact on the refineries or on the corporation profitabilities.
Okay. Well, the United States over the weekend has passed the law that it will allow crude exports. That's lifting a 40-year ban. Are you expecting a further fall in crude prices because of this? What's the in-house view on crude for the next, say, quarter or two?
I think after that, when OPEC had taken a decision, there is no limit for each individual can produce, so that itself has created a already market was surplus with the crude. Further it is gone. Now over and above, when Iran will come in the market, when ban will lift it, that will also will add to them. And under such a situation, when US has decided or going to decide it, he will open the ban for the exporting the crude, this will further worsen the situation, oversupply to the markets. So this crude price is definitely with these conditions is going to be further decline unless until there is a demand will get picked up by the other countries. Then only possibility कि may balance come. Otherwise, crude prices may likely to come down further.
All right, we leave it at that, Mr. Namdeo. Thanks so much for joining us. Well, that's the word on HPCL. Just wanted to point out, Indigo is under quite a bit of pressure this morning. It's down 3.5%.